Hi, Ashwin.
Hello.
I see that the market has changed direction since July the 14th. Since then, the Nasdaq has climbed more than 16%. The Dow has gone up slightly more than 10%, while the S&P has climbed more than 13%. Can you tell us, Ashwin, whether this is the start of a bull trend or is this a fresh bear market rally?
Well, Tessie, whether this is a bull trend or just a bear market rally where the market is taking a pause before it drops once again, it all depends on the inflation data from here onwards. Like we said in our past videos, that the moment inflation backs down, the narrative will change. And this week, this is exactly what happened. For June, the inflation was at 9.1%, shocking everyone. In the month of July, this week, it was revealed, inflation dropped to 8.5%. It is a very nice start. And this caused the stock market to climb further. On Friday, the Dow Jones picked up more than 400 points. Okay, so it's been a very nice start. And whether it goes up from here is data dependent, what we call. If inflation drops further, we will see a bull market trend starting.
But it's been a month now.
Yes, since 14th of July, I just realized that today.
Yeah, it's 14th of August.
Yes, 1 month already. So can you see what we've been saying in our past videos, Jesse? We look at the big picture. Day to day, you panic. Today, market up 300 points. Today, market down 300 points. But when you look at the big picture and sit down tight for 1 month, you will notice that over the past 1 month, actually, market has gone up. So we always say, no point panicking. Look at the big picture, 3 to 6 months. Look at the big picture, 3 to 6 months or even 12 months. Do not panic from day to day. Now, more important than this, whether it's a bull market or a bear market based on inflation, let me tell you something, 2 big things that have happened this week, even though inflation has dropped. Number 1, according to JP Morgan, this past week, retail investors bought 3.4 billion of equities. Okay, whether straight equities or ETFs, total 3.4 billion of equity-based products and equities. And in the single stock category, listen to this, they bought 638 million worth of stocks. Interesting, right? Retail investors.
People are coming back to the stock market, Ashwin.
Yes. Now, more important than this, something else of importance has happened this week. Tiger 21, which is the peer network of ultra high net worth individuals and entrepreneurs. Together, they are worth about 140 billion US dollars. Now, these guys have announced this week that they are buying stocks for the very first time. Previously, Tiger 21 is always heavily invested in US commercial property, factories, houses. And now, for the very first time, they are looking at stocks. Now, founder Michael Sonnenfeld says they are now seeing some real bargains, quote unquote, in the stock market.
Ashwin, there are 2 things here. Does that mean that since March, end of March, say 27th March, the market has bottomed out? That's number 1. The second one is, why would they move from property to the stock market?
You see, listen to what Michael Sonnenfeld says. They are seeing some real bargains. Now, I've been saying this before, Tessie, in the month of March, April, even May, that when markets drop like this, we are very, very tempted to buy quality companies. Because let me repeat this fact again, once again. When a quality company drops so much, when its business is solid, now the big names, all the big names I don't want to mention.
Yeah.
It is so tempting today at these valuations to jump in to buy those quality companies simply because they have wonderful businesses and they have low or no debt. I've been saying this. So
yeah,
this is what Michael Sonnenfeld, in a way, is saying quality company, bargains to be made.
Bargains.
He's looking at quality companies.
Now, so the question is whether this is
a whole sheet of them.
The question is whether you're entering at the bottoming out or
Correct.
Yeah, a bear market rally.
So, like I said, right now, we are at a stage where what is going to happen to the market from here, I repeat, is 100% data dependent.
Mm.
If inflation climbs back above 9% for the month of August, which you will see in September, then I'm afraid the market will resume its drop and everybody will say, this is a bear market rally. Means not the end of the world. This simply means, as an investor, you have to wait longer till inflation drops and or the Fed stops raising interest rates. Very simple. The problem comes in when client says, I only got 3 months to wait and I want to make so much money in 3 months, or I want to make so much money in 6 months. Now, let me explain to everyone, this is not that kind of market anymore. Please understand clearly. This market today is different from the market in 2020. Forget that scenario. Why? The punch bowl has been taken away. The Fed says, okay, no more easy money. Boom. No more market go up one way. No more. This is no more a punch bowl market. This is no more a free, easy money market.
So
this
what are you saying, Ashwin? Are there opportunities? Are
Yes.
there opportunities to make
There are
money?
opportunities. There are niche opportunities to make money, not broad-based. It all depends on what kind of companies you buy. Low debt, no debt, and good businesses, or you buy companies with, forget about buying companies with high debt. And please, investors, Asian investors who like to do this, forget buying penny stocks, please. This is not the era of buying penny stocks. Why?
Yeah.
Because inflation is going up. So interest rates are going up. Okay. Even though inflation comes down, interest rates are going to remain high. In this kind of environment, I'm sorry to say this, the penny stocks will not survive. The small companies will not survive. The SMEs will not survive. Only the big boys doing quality businesses and good businesses with low or no debt will survive. So
in this market environment,
what I'm trying to say is there is still money to be made, but it's not straightforward anymore. I'm not boasting my trumpet, but right now in this kind of environment, you need the help of a professional to tell you what to buy and what to stay away from. And that's
so
a fact.
may I play the devil's advocate and ask, why should we invest at a time where volatility is so high and the scenario is so uncertain?
I love this question, Jessie. I love this question.
Because this animal has proven to us that it doesn't want to be
I'll give you a very nice analogy. So market is volatile, right? Up, down, up, down. Nobody knows when inflation goes up or down, right? Okay. In this volatile market where you don't know the price is going to go up or down, it can be up one day and down another day, right?
Yes.
Okay. Now let's come to fantasy land, the metaverse. For example, I'm giving you an example using the metaverse. You are now inside a Louis Vuitton shop. You are inside a Louis Vuitton shop, where the best merchandise is there. While you're in the shop, suddenly on the loudspeaker, a lady says, excuse me, all customers, starting in the next 25 minutes, you will be getting 75% off on every handbag from Louis Vuitton on this shop floor.
Yay!
Would you be excited, Tessie?
Of course.
Wow, in the next 25 minutes to 30 minutes or whatever.
Scramble and buy.
Exactly. So do you see, when you have the expert professional advice, when the market becomes volatile and drops 20% or 10% or whatever it is.
Caveat though, you have to be in the Vuitton shop.
No. So
you have to be there in the shop.
Yeah. So our quality company is like buying a Vuitton at 40 to 50% or 70% off. And right now, there are a lot of Vuittons in the market that are highly undervalued. Please, let me tell you this. And only I, as a professional, I'm not boasting, but I, as a professional, yes, I can tell you what is undervalued and what is not. But
so you're saying to me, stop. So you're saying to me that while we are uncertain whether this is a bear market rally or the market has bottomed out, you still find opportunities to make money.
Yes. And that is why, Tessie, while this market is moving like this, we have been taking advantage of some companies who have excelled in their performance, and we do something called high frequency trading, where we go in, out, intersessional or every few days, and we make profits between weekly to fortnightly, or worse come to worse, about monthly. So we are doing this. It's called high frequency trading because in this volatility, we love volatility because this enables us to pick up quality companies at fantastic prices, and intersessional or every few days, they go up 2-3%. We make 3-4% a week. You
Well,
see,
I can testify that it works.
You have already
I
profited
can
from that.
testify that it works, but
Yes.
I have friends who say, I'd rather keep my money safe.
You see,
So I asked them in return, what do they do with their money?
Safe? Do you know what is
where else could they go with their money? What are the other options?
The normal will say, I'm going to put my money in the property market. Now, let me warn you, once interest rate goes up and the mortgages default, property is the last thing you're going to touch, because in the short term, property market will drop and you will not find any buyer. And you may not even find any renters because of the property market
well
drop.
I think we should qualify that we're not talking about the ultra rich or
okay.
those with more than $5 million. Yes.
So what I was saying,
we are talking to the retail investor,
exactly,
with say a limited amount of money like $100,000.
Exactly, you hit the nail.
Really need to calculate how best to make the most out of their money.
As a 100,000 investor,
what do you do? Buy forex or buy
3 to 4%
Malaysian
a week,
or
average.
buy property?
As a 100,000 investor, it's too little to buy property. As a 100,000 investor, if I give you 5% a month trading high frequency, like I said, in this market, there is money to be made from companies that have got good businesses. Okay, and one particular company, we've been creaming it because the business, listen to this, is a virtual monopoly. I will not give you details because we're running a business here, but there's a lot of opportunity made. And like I said, it's because of this volatility that you walk into a Louis Vuitton shop and you say, okay, the next 25 minutes, 75% off all handbags. If you did not have, listen to this, if you did not have such kind of volatility, you will not have such kind of sale, or what the normal people like to say, cheap sale. You will not. So volatility gives us a cheap sale.
Yeah.
Okay. Otherwise, you will not. So
hang on.
The message here is, do not be afraid of volatility. Do not be afraid.
I have to pull you back and remember the audience and where they come from, right? So they come from a space of, this is my nest egg, I need to protect it.
Yes.
So what are the options? I can go to some place. Wait, hang on. So they can go to a place where they're offered capital protected equities or products.
Give me a second. I have to pause you there. When you say capital protected, there are banks like Citibank, I'll be obvious here. They are charging you $250,000 US to lock up in a bond, and they'll give you a capital protected. Just to clear that fallacy, let me clarify this on this video. So you put your money with Citibank, $250,000 US, and you have a capital protected bond. What happens in the end? In the end, you get 1 to 3% after 1 year or 2 years, and your capital is given back. So actually, how much do you make after fees? You only make 1 to 3%. Is that worth it? $250,000, you get 3% after 1 to 2 years. I think it's not, doesn't make sense to me.
The other thing is they have this much money, like say R1 million.
Yes.
And the question is, do they put it in fixed deposit or in a ringgit-based asset?
Okay, since you're mentioning a ringgit.
Hang on. Or because we are proposing a shift to US dollars because that's a safer currency. So because you buy equities
if you talk about ringgit, if you talk about ringgit, I wouldn't suggest that because ringgit is dropping. So when you put in fixed deposit, you get maybe 5 to 7%. Okay, but your ringgit is dropping 3 to 4%, or in fact 8% a year. Ringgit is dropping 8% a year. So you see, it doesn't make sense.
Yeah.
So I'm saying this is not a broad-based market. It all depends which currency you have in, what is the country, what sector you're investing in. Property market is not straightforward anymore. So you need the help of a professional to tell you what's going on in which sector, to be your eyes and the ears and say, what's going to happen next, what's happening next week, that kind of thing.
Yeah.
You need that. Honestly, you need
I know. I don't
want to blow my own trumpet, but you need someone.
Hang on. So you see, the point is you don't touch our money. The money goes in a broking account
Yes.
in the client's name,
Yes.
and you provide the trading advice.
Correct.
And the control remains in the hands of the
Exactly.
client.
You put-
And
the client
all
opens an
through
account.
the journey,
Yeah.
the client gets, you know, you in their ear telling them which direction to take, so that
Yes.
we are so sure-footed. That's
And there are two
my
ways here.
experience.
We can trade for you, or we can tell you what to do. It's up to you, because some clients not comfortable with whatever. Okay, we can even trade for you, because the thing is this: the best movements happen after 12 midnight.
Yeah,
You know, so you are
because it's in the US market. Yeah.
So if you give us authorization, we can go into your account and trade for you.
So I think the best thing to do is to have a chat with Ashwin. You can WhatsApp him, or you can, you know, call him, watch his videos on YouTube. So tell us how to contact you. Everything is bespoke. Everything is
Yes.
discussed and customized to your risk reward
Yes.
appetite.
Before I sign off, there's one more scheme that we have besides high frequency trading. It's an index-based strategy where clients can make money both ways, regardless of market direction. I repeat, where clients can make money both ways, regardless of market direction. This is strictly index-based. We do not buy and sell physical stocks. Okay, so it's a different ballgame again. But for those who want to do this, or the high frequency, or both together, the base floor committed margin is 100,000 US dollars. Where I explained to you how. Right now, like we said, we don't know whether the market's going to go up and down, depending on inflation. If you do the index-based strategy, whether market goes up or down, we'll make money for you both ways. And for that short-term value, up or down, we will give you a payout every month. So this is so many things we are doing. Why we have done this? Because this is not the same market as 2 years ago, like I said. We are changing with the markets. But at the heart of it all, the reason we can do so many things is because we have an algorithm called Human Quant. And I challenge anyone who says I can do it myself, because one thing, you don't have an algorithm. And secondly, let me say this explicitly: the banks don't have an algorithm.
The markets are too uncertain to do it ourselves. But we need professional support.
Exactly. And let me repeat, the banks do not have an algorithm. Today, Credit Suisse is firing his top managers and is rethinking his business because they have lost money. I'll be explicit here. Okay, I'm talking facts. Everybody knows Credit Suisse has lost money. Everybody knows. Why? Why? Because they are too, I feel, okay, I won't blame anyone. I feel they are too engrossed in pushing products. And we've been saying this since we started our business 12 years ago.
Never mind them. Let's focus on what you can do for us.
Yes, my email is ashwin@ppchk.net. On WhatsApp, it's bit.ly/algotrader. And YouTube, bit.ly/algowealth. And you can also contact us on WhatsApp and give us your email address, and we will send you our free Algo Research Ideas newsletter, which we send out every day, to give you ideas of what we are about, what we do, what is our brain about. That is very important. And let me repeat, or let me say this once again. We do not push products. We provide bespoke solutions to create wealth for our clients.
Thank you, Ashwin.
Thank you.
We'll speak again soon.
Thank you.